Hi, this is Mark Triplett with Triplett-Westendorf Financial Group. I'd like to share a little bit about our purpose and timeline philosophy, the guiding principles we apply to help folks retire with purpose on time. We believe that every dollar has a purpose, and every dollar has a timeline for which it will be used. We start by identifying the needs, the basics to exist in American life today. All the things you need just to sustain yourself and your family. They don't necessarily make life really enjoyable, but needs sustain your basic standard of living, and we have to have them covered regardless of what happens to the economy. In addition to needs, there are probably things that folks want to do, and those are the things that make life a little bit more exciting and fulfilling throughout retirement. Wants are the things that we could forego if the economy or circumstances warranted us to pull back on our spending. Then we have what I call the non-negotiable wants. These are things that you don't necessarily need to sustain your life, but frankly, if I told you you couldn't do it because the economy was bad or your investments had lost value, you'd be pretty upset with me. For me, a non-negotiable want would be skiing. If you told me, Mark, you can't ski this season because the economy's bad and we have to pull back on our spending, I'm gonna be pretty upset. So those non-negotiable wants really should be added to the needs category. They must be accounted for and covered with sustainable household cash flow. Some folks may have leftover money that they don't need for anything. The purpose of these dollars could be applied towards creating a legacy or maybe charitable giving. They are truly liquid because they have not been allocated for anything specific or over a specified timeline. The first step of our Purpose and Timeline 5-step process, or PT5 as we call it, is to determine and identify and organize the retirement income sources coming into the household. If you're fortunate enough to have a pension, that's a good baseline level of income. Beyond that, we have Social Security, for example. For many couples, Social Security will be staggered, because usually one spouse claims Social Security benefits at a different time than the other spouse, whether they do it strategically or just by happenstance. Next, we have to organize retirement assets to determine how they should be allocated and coordinated and distributed throughout retirement, depending on when they are needed and what they will be needed for. For example, money that is needed to maintain a comfortable lifestyle over the next 1 to 3 years may be best situated in a place where it is accessible and not at risk. So a good place for that might be a bank account, CD, or even an online money market. We know that we're not going to earn a lot of interest on that money, but we also know that it's going to be consumed in the near future and that it must be available and ready to be deployed. Then we may have money that we might not need for the next 3 to 10 years. They have a very specific purpose, maintaining our lifestyle, but also a very definite time frame, 3 to 10 years. We strive to put those dollars in a place where we can't lose them, but we might have a reasonable opportunity to earn a better than average interest rate by giving up a little liquidity. So these dollars, we don't really feel safe putting in the market, because if the market experienced a significant downturn, folks would have to make a tough decision. Either sell into the downturn at a loss or cut back on their lifestyle. A market downturn could reasonably take a year or longer before hitting bottom and several years to fully break even. Therefore, we often advise folks to have enough resources protected from market risk so that they can adequately immunize their comfortable lifestyle from a market downturn potentially lasting 3 to 10 years. Therefore, these dollars must be in a place we can consider to be low risk, and we're willing to give up some liquidity because we don't need them right away. We'll often draw on strategies where the primary objective is avoiding market losses, and the secondary objective is earning a competitive interest rate or rate of return. We call them loss avoidance strategies. Finally, we have money that we really don't need for 10 to 15 years or longer. And with these dollars, we're okay taking managed, moderate market risk, investing in a well-diversified portfolio of marketable securities over a long period of time. There's plenty of time to recover from a market pullback, and a systemic market risk event is unlikely to affect the ability to maintain the current standard of living for many years to come. By structuring these dollars and allocating them across these spectrums based on the purpose and timeline, we strive to insulate our clients from a situation where they feel like they can't spend and maintain their lifestyle. If we go into a market downturn, dollars that they need to spend to maintain their current standard of living over the next 10 years are situated in a way that they are unimpacted by the equity and bond market risk. This makes sense to us and the folks that we serve. Due to inflation, it is possible that we may need to structure additional sources of lifetime income to supplement Social Security and pension income. The rising cost of goods and services often outpaces the cost of living adjustment applied to Social Security benefits. And pension income, if you're lucky enough to have one, is unlikely to include a cost of living adjustment. Some do, but many don't. Regardless, creating a supplemental lifetime income stream is another tool that we can deploy, thus pushing off the need to sell investable assets further into retirement. Now, the trade-off with our purpose and timeline philosophy is that we're not all in the stock market all the time. That means that our clients don't get full participation in the upside of the stock market when times are good. There's an opportunity cost. However, protecting a portion of the retirement assets from market risk allows us to create a little bit more confidence and consistency throughout retirement, as opposed to really having to ride those emotional swings of an up and down market while still taking advantage of the wealth creation potential of the stock market with our long-term dollars. In other words, we're striving to avoid a situation where the folks we serve are forced into making a difficult decision: sell at a loss or reduce their lifestyle. I hope this is a helpful explanation of our planning philosophy we call purpose and timeline. If you have questions, you can reach out to one of our team members and schedule a no-cost, good fit call to learn more about our philosophy, our process, and what it's like to have a relationship with our firm.